our weekly Power Hour episode. I am one of your hosts, Ryan Henderson, and I am joined, as always, by the one and only Brett Schaefer. This week, we have the tariff tantrum. Is that what we're calling it, Brett? I know you've been using that lingo. So probably one of the biggest news items we've seen in maybe more than a year in financial markets. Talked a little bit about it last week, but we're going to dig into the actual implications, the details, companies that are both in our portfolio and not in our portfolio that are going to be impacted by this, as well as those that have maybe been sold off but shouldn't be too impacted. We've also got some other pieces of news for the week. Harvard is taking out some debt, which is a bit bizarre given they have the largest endowment fund in the United States, but we'll talk about why that is. We're going to be talking through some other news pieces as well, Apple's potential ramifications, and then what economies benefit from the recent news. But I guess, Brett, how has Tariff Tantrum treated your portfolio?
I think better than most. I haven't been immune to any pain, gone through a slight drawdown, but as we'll talk about, I think not having the giant exposure to big tech, Magnificent Seven, having a little bit of international diversification, small versus large cap, growth stocks versus value stocks, it can help you in an environment such as this and the counter cyclicality of some of your holdings, or at least some of the holdings in our portfolios. It can give you much more flexibility to be aggressive during bear markets and buy some of the stocks that we're going to talk about today. So exciting times, chaotic times. Maybe by the time we record this, we're going to be at war with China. No, that's a bad joke, but things are escalating quickly. And from my standpoint, I'm excited to talk.
Before we do, though, we want to talk about Interactive Brokers. Interactive Brokers is the professional's gateway to the world's markets. Interactive Brokers offers commissions starting at $0 on U.S. listed stocks and ETFs with low commissions on other products, and there are no added spreads, ticket charges, or account minimums. Clients in over 200 countries and territories trade stocks, options, futures, currencies, bonds, funds, and more on 160 global markets from a single unified platform. Clients can earn interest rates of up to 3.83% on instantly available cash and pay margin rates up to 53% lower than the industry. You can also earn extra income on your lendable shares, and IBKR's powerful award-winning trading platform helps every level investor succeed from beginning to advanced on mobile, web, and desktop. When placing your money with a broker, go with a broker you can trust. Make sure your broker is secure and can endure through good and bad times. We use IBKR here at Chit Stocks for their best-in-class international coverage, and you can too by heading on over to ibkr.com. Interactive Brokers is a member of SIPC. Well, I think the place to start would be maybe go through our portfolios. What have we been buying and selling? And maybe we can rip through and talk about the implications of each business. I've listed out what companies I think are the most affected, what companies are the least affected, and also been buying a little bit, which I'm happy to talk about. Where do you think we should start?
Yeah, let's start there. Who wants to go first?
I can rip through some of the companies that I think were most impacted. So, and I'm splitting this into two sections: direct impact and secondary effects, because if what has been quoted last Wednesday actually gets implemented, goes into effect, there isn't these delays, which we're seeing, and we see like truly just direct implementation. Every business is going to be impacted on some level, but the direct impact, those that get hit the hardest for me are DR Horton, largest home builder in America. They're getting hurt for other reasons as well. Home supply is starting to, or available home inventory is starting to grow. So that kind of affects them being one of the only providers of new homes, or purchasable homes, I should say. But the other part is, even though some of the major input costs like lumber were excluded from the tariffs, there will be other input costs that rise, and any sort of pressure on the consumer in terms of like my assumption here is that this is sort of a consumption tax across the board. This will be this will potentially hurt how much money consumers have to spend on different goods. So affordability would come down, all else equal. If prices are the same, interest rates are the same, consumers can't spend as much on homes. Obviously, affordability is a little more difficult. So that puts pricing pressure on DR Horton's homes. I think we're seeing that in the stock reaction.
We
Any
should
thoughts?
also I would guess that given a lot of people have equity in their homes or a lot of built up equity in their homes, there's actually a great article in the Wall Street Journal this week about that. If there is pressure on the wealth of in other parts of someone's, personal balance sheet, you could see more incentives to sell your existing home and downsize, whatever the case may be. So that could increase inventory as well.
Second company that would be quite impacted is Amazon. 50% of the top sellers on Amazon come from China. Read that little stat this morning. Cost of goods sold will go up. Consumers will likely be forced to eat the costs, which I assume will just hurt overall volume for e-commerce. AWS, I think, should be largely unaffected, but I think a slowdown for consumers means there's probably going to be a slowdown for all the AI spending that we're seeing and possibly makes it that much more a risk of overinvestment on that side of the
Yeah.
business.
At least AWS isn't directly affected outside of any dire stuff that could happen with the semiconductor industry.
Yeah, I mean, maybe it's a little more expensive to prop up a data center, but the semiconductors, I imagine, are one of the most expensive costs of propping up a data center, and those have been left out of the potential tariffs. The third one here for me is going to be Ally. I think this might be the most impacted, actually. So there was a 25% tariff on imported cars that's already been implemented. On May 3rd, this will also apply to imported car parts. So there's really no way around it. Cars are going to be more expensive. Now, aluminum, steel, I think we're both left out of the tariffs, so that might help a little bit. But I mean, some of these, and I know Canada and Mexico have sort of they've been excluded from what was talked about last week.
Most of it, yes, yes. Yeah, there I read that Mexico's blended tariff rate, and actually for automotives it might be 0, but the blended tariff rate, as we'll talk about later, is maybe only 8% versus China at 100%, so not nearly as impacted.
Yeah, so I mean, kind of my thought process here is cars are more expensive. The number of people buying new cars will probably go down. And I'm actually going to talk about O'Reilly here in a little bit. It benefits O'Reilly. Um, but number of new car purchases I expect will go down if these tariffs are implemented, or when these tariffs are implemented, I should say. If that happens,
Implemented today, as of this recording, right? Most of them.
yeah, we'll see if
And it was
anything
last
gets
night at
walked
midnight.
back. My assumption is that I don't know, we see either more delays or something pushed off. I could be totally wrong on that, but assuming that this impacts the car companies today, car prices are going to go up. Like, I don't think there's really any way around that. Dealerships that are porting these in, it's going to go up. Um, if that happens, loan originations will go down. The number of loans being issued by Ally, and unless the interest rate drops too, I think it's going to be hard for their net interest margins not to contract because they earn the best spreads on their auto loans. So Ally sold off pretty hard. I think, well, it's been obviously a crazy week, but they got sold off pretty hard. I suspect they will be impacted by this.
Yeah, I don't know if I agree with you on this one as hard as they can be flexible, right? With what they're originating, and if used car prices go up, they benefit. They can like their existing loan should be fine, and it's over a multi-year period, so the loan book doesn't get recycled every month. It's on a 3 to 4 year time horizon, and the only okay, the only thing I would be concerned about, I think, is if loan loss rates go up. Because again, if there's a consumer pinch and people have less funds available, things are getting more expensive, blah 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 blah. But aren't they the one like I would be worried about a dealership but Ally they can get through this a little bit better, I would think, especially if they can pivot pretty flexibly. I mean, they made some mistakes in 2022 around their lending, and they pivoted pretty well. I mean, they're still recovering from that, but they've been profitable the whole time. I would think, I don't know. They're going to be impacted, but I don't think it's a dire situation for them.
No, yeah, I wouldn't say it's dire, but I think what most people expect, and this is why O'Reilly stock I think has gone up over the last week. Could be wrong on that, but I know it's been less impacted. Is anyone that's got that 5-year-old, 7-year-old vehicle, if they were considering a purchase, even if it was a used car, even if it's a new car, they're pushing that off and they'd rather just invest in improving their existing car for the time being, which benefits obviously O'Reilly. If people are spending more money on their older cars, that's beneficial for O'Reilly. If they're deferring, if altogether car purchases declines, Ally would be impacted, even if it's used versus new.
Yeah, somewhat, but they've taken. I think they only take in like 10% of the loans that they see. So I don't know. If they have to take in fewer loans and they're just sitting in treasuries for a little bit, yes, their margins are going to contract. But I don't know.
No, yeah,
I,
that's my thought is basically you'll see some net interest margin contraction. It's not the end of the world. Like, it's not like they go bankrupt because of this, but th- they're already seeing a lot of net interest margin pressure. But if they have to buy treasuries and interest rates don't come down, which so far it seems like the Fed is waiting, then net interest margins potentially contract. But yeah, I don't know. We can if if the impact is interest rates here, if that's how your company is impacted primarily, I kind of think of that as a second order effect.
oh,
Like if it's not pure tariff increase, then I kind of say like I would not call that a direct impact because
okay.
we're yet to see what happens with interest rates.
Okay, I'm getting a comment here. Again, this is, I think, less than 10 minutes into recording. Thank you for the anonymous guy. Evergreen here says, "Hey guys, Trump just announced that 125% tariff is only going to be applied to China, while the rest of countries should only be at 10% over the next 90 days. Markets are ripping crazy times. Let's look up SPY. Wow. Whoa. Yeah. That happened right as we started recording. Guess what the S&P's up, Ryan, today?
5%.
7.
Oh my
7%.
gosh.
Let's find some Walter Bloomberg tweets, which he's getting some slander. This guy just copy and paste Bloomberg headlines. So don't blame the messenger when all these media outlets are taking his stuff. But that's another story. Let's do a little live digging here, Ryan. Walter Bloomberg.
Yeah, I
Okay,
appreciate the
okay.
comment here. Here's the other thing. The situation is so fluid. It's changing every day. My biggest concern would be if you have a huge chunk of your costs coming out of China. That's a business you should worry about. And I don't know, part of me just thinks like fade all of this. I know that's lazy thinking, but I think if
Fade everything
stocks
but China. Fade everything but anything with huge exposure to China. Do you want?
y-
Should I read the headlines first before we get into it?
yeah,
Because I
go
think
ahead.
honestly, you got proven right here in about 10 minutes on the pauses. Okay, Walter Bloomberg. I think it's either a tweet. It's either the Truth Social stuff or some sort of news conference. Trump raising China tariff to 125%. Effective immediately, Trump authorized a 90-day pause on tariffs, applies to reciprocal and 10% tariffs, effective immediately. So I'm assuming, yeah. Washington AP, so the Associated Press, Trump says he's backing down on most nation tariffs for 90 days amid market meltdown, but he's raising China tariffs. All right. Well, there you go.
I talked about this a bit, I think when Trump first came into office. Maybe it was when the tariff situation was just starting, but he and I think this administration overall cannot experience a like a 20% drawdown in the indices. Like
They don't like it. You mean they don't enjoy it and they get scared by it?
I think, and maybe it's any administration today, like it's such a barometer for people's approval of a president, which even though it shouldn't be, it's like I saw stuff like approval ratings have plummeted since this happened. And I would bet you if markets didn't change at all, nothing would have happened to approval ratings. So I just don't think an administration can weather a downturn in an index like that, especially when it's self-inflicted. So that would be my guess for I guess, what inspired the pushback or the delay. Because what
Maybe. But the China one is going to impact the markets either way if the 125% stays intact. I I guess maybe an election year, but it's just too big brain thinking to believe in that. I mean, the market went down, what, a significant bear market in 2022, and no one talked about that when it came to the election. It was more of inflation. Now, that was an inflation-induced downturn, but I think cost of living is much more important, which, well, depending on how much of your lifestyle is financed by cheap Chinese goods, that could get more expensive here. The way, and maybe we are getting into the country level stuff. The way I like to look at it is it seems like they're targeting China aggressively, but everywhere else, it's probably not going to be as bad as people think.
Yeah, I think that's fair. I think that's probably the easiest and most helpful way to think about it in terms of like, if you just think about it that way, over the next 5 years, you will probably make actions today that serve you well over the next 5 years. If you start to overthink every single country's
Yeah.
implication, and you start to think, oh, how's that going to have an impact on Google's advertising revenue?
Every headline, you're just going to get overwhelmed and make bad decisions.
Exactly. Let me just fly through a couple of the other ones because here's just how I think about it overall. The secondary impact, all the software stocks, I think the biggest impact that they would see, other than I own Paycom, so if there was like big mass layoffs, they'd be impacted. But for most of the B2B software, I just think if the cost of goods, cost of labor, cost of whatever goes up, budgets tighten, potentially you start to see slowing growth rates across some of these software businesses. Maybe you start to see companies being a little more discerning about their software spend. Kind of applies the same for remittances. So I own Wise and Remitly. I think if consumers are a little more pinched, if inflation, like, here's my thinking. uh, you add a bunch of tariffs, inflation goes up, consumers don't have as much discretionary income, they can't send as much money back home. Remittance services are impacted by that in terms of volume, but I still kind of think of that as second order impacts. Like every business is impacted if every American business is impacted if American consumers don't spend as much money. So
Yeah,
it's
and there's a lot of factors with Wise and Remitly. You have the devalued dollar potentially that they've been talking about. You have the immigration stuff. That's a whole nother political football that's kind of been, something new with this administration. So what I've thought of, or what I've realized, or maybe it was just a nice reminder, is market share gainers, market share takers is a good place to be. Where I look at Wise and Remitly, okay, if the remittance market takes a tumble, they're taking so much market share within remittances that I think they'll still grow.
yeah, anti-fragile companies. That's kind of you know, they benefit in situations like this. I'm going to go quickly through 4 companies that I don't think should be very impacted at all. You tell me where I'm wrong. The Mexican airports, I don't see the biggest impact. Now, once again, second order effects, consumers can spend less money. Maybe they go to less trips and you have less tourist volume through the Mexican airports. But
Yeah, but most of the Mexican airports, their volume is domestic. So even though international, they're big spenders, they can help with commercial activities there. Majority of their volume is domestic. So even if the United States traveler is a little poor, that's not going to affect them that much. And we've seen their traffic numbers hold up through March. Who knows? Maybe we'll get rug pulled in April and May, but the numbers look okay for now.
second one is Coupang. and maybe I'm haven't thought through it at all, but I don't really see how they're impacted. They don't do business in the U.S. They don't
I agree.
acquire goods from the U.S. Uh, they're just a totally separate business. So I don't really see how they would be impacted. So the stock has sold off, which is kind of just funny. Maybe it's just the general like correlation to indices, but
Yeah, well, right now, well, maybe it's ripping now because the South Korean ones are off again. Trying not to overthink this. Yeah, I mean, it's up 4% today now. Maybe because there's a lot of South Korean car imports to the United States. Their thinking is, okay, that economy could go through a huge recession if that goes away entirely, which it seems like an overreaction. But again, Coupang is a market share taker there. And I will reiterate this, the administration wants a devalued dollar. So any company like Coupang that has seen major headwinds over the last few years by the Korean won and other countries, it applies to the local currency getting devalued versus the US dollar. If that reverses, Coupang's earnings in US dollar terms are going to see a massive tailwind. So again, maybe they're a beneficiary. Who knows?
third one here, Philip Morris. I don't really see how they would be too impacted. They don't sell cigarettes in the United States, so that part won't be impacted. I tried to do some research on the Zyn production or Zyn supply chain, and it looks like synthetic nicotine is just made.
Kentucky, Colorado.
Yeah, it's just
Yeah.
made in labs local to the market. So if they're selling Zyn in Sweden, I assume there's a Sweden lab that produces the synthetic nicotine, but the most of the business is in the US, so it's all localized here. It's not crossing borders. I just overall don't really see why there'd be too much of an impact to Philip Morris. Plus, Zin's still a very small part of the business. And the last one is O'Reilly. I think if cars become way less affordable, people will spend more on their used cars already, which benefits them.
All right. Yeah, I agree with that one. Hard not to agree with. Philip Morris. Well, why don't we go through mine? I made some buys and sells this week, and I guess I can go through those, and then we can talk about anything that interests you. Maybe you can ask any questions, or if you're curious about my decisions. I guess, yeah, my portfolio as of this moment. Well, let's just talk about what I bought and sold. So I bought some Airbnb, one tranche at tranche. Sorry, that's a fancy word. I watched The Big Short too much. One purchase at $114, one at 106. I also bought some Alsea, $45. Added a little bit to Coupon, GoGo, Nelnet. But the big decision I made, and it looks okay right now. Not sure if it will be the right decision, but I felt good about it at the time because I felt like there was stock was getting pretty fully valued. And I, again, with the Airbnb purchase, I'll say a purchase and some adds to some other things, I felt there was a lot of other opportunities in my portfolio. I sold out of Philip Morris International entirely at $161. It looks good now because everything fell right after that. But I'm out of, I guess, not never selling Philip Morris. Still love the business, but I outlined it in the newsletter, which again, check that out on the Chit Chat Stocks newsletter on Substack. Just did some basic analysis and thought some other ideas look better. I bought some more Mittley, bought a little of the TLT, long-term Treasury bonds, to basically have, I don't know, you know, cash position, stuff like that. And then I sold a little of the Mexican Stock Exchange as that had done well to finance some other purchases. So not too much activity, but the big one, selling out of Philip Morris and adding Airbnb. I will say another the last thing is what's frustrating is these brokerages not giving instant access to your funds. When you have to wait a week and you deposit cash from that high yield savings account, feels like forever during a market crash.
Yeah. Yeah. Which with IBKR, our sponsor here, you get 3.6% interest on your cash
No matter what.
when it's sitting in IBKR. So you basically have sort of a high yield savings account within there. Um, for me, I only bought two things. I bought Google and I bought Airbnb. I've wanted to own Airbnb for a long time. If if the worst thing that comes of these tariffs are that people aren't able to travel as much, like Airbnb is going to be impacted. It's not going to kill them. So I think this is a fine entry point, and looks like that might be the best performing stock within 2 days of buying that I've ever had.
Yeah, what's it
because
at now? Is it? I'm sure everything's just ripping. Whoa, yeah,
$116.
116. Wow, that is really. Who knows? When we release this on Sunday, the markets could be crashing again. So I don't know. I mean, look, I was on Twitter. I said something along the lines of Apple, Nike, and Tesla are going to get hit. Essentially, the China risk, right? These countries are, or excuse me, companies have huge exposure to China, and that is just a crazy uh, situation at the moment with both countries putting 100% tariffs on themselves. Someone said, and it looks like they're right now, that that's not going to age well because they're going to capitulate, and they have. But I look at it, let's say, what's Apple going up today? Apple's already up like 5%. It's up 11% as of this writing. Are the tariffs going down to 10% on countries not outside of China? Is that really going to help Apple that much? I would still think they're in a pretty bad spot. Am I wrong? Am I looking at this wrong?
I don't know. I know they have. I, I'm not totally sure where the bulk of their supply chain is. I have heard it's
It's
in
China.
China,
It's mostly China.
but aren't there? Isn't there some in India as well?
They're okay.
They're
They're
trying to
diversifying
diversify.
a little bit. It's going to take a long time.
Yeah. I on this downturn, on over the last week, the last thing I would have thought is now, wow, I should buy Apple. Like
That's what I
they
think
are
too.
probably
Yeah.
one of the most at risk of a big increase in costs, and they aren't that cheap to begin with.
All right. Trailing P is like 28, probably 30 now after this rip.
Yeah. I went through, maybe I'll actually share this. I went basically through the Magnificent Seven, and I wrote a piece this weekend just called "What's the cheapest Magnificent Seven stock?" And I just looked at 3 metrics. Let's make sure I get them right. EV to, I know none of these are perfect. You got to look at forward results, all that stuff. EV to free cash flow, EV to EBIT, and forward EV to EBIT. Those are the 3 that I looked at. I think not any one of them is going to be perfect, but you can get some semblance of a valuation there if you kind of triangulate and combine the 3. Can you guess what the cheapest was on every single metric?
Trailing EV to free cash flow or
It's
earnings
on all 3: EV to free cash flow, EV to EBIT,
or
and
yeah, okay,
forward
yeah.
EV to EBIT.
Google or Alphabet.
Correct. By a
Yeah.
long shot. You know what was second? Well, not EV to free cash flow
Meta.
because of the CapEx, but Meta,
Yeah.
which is wild after such a big jump for them.
They had quite the sharp drawdown after the inauguration. Yeah, Alphabet looks interesting. People are pretty bearish on them. So if you think everything's going to be generally as it was, despite some, pretty tough AI competition, things are going to work out just fine. Yes, they are at this point tied to global GDP growth. And if there's a global recession or even a US recession, they'll get hit in the short run, but that doesn't affect their moat or lack thereof, or if it's weakening or strengthening over the long term. And you have that Google Cloud division just growing like gangbusters. But Apple, before these tariffs, there was no growth. I don't get it. Same with Nike. Nike's probably even in a worse spot. Nike and Tesla are both in a worse spot than Apple with declining revenues. And that China market might as well kiss that goodbye. I mean, they are, and China may not retaliate this way, but they are right on the chopping block if they want to. Just look at what they did to H&M that one time. They just wiped them out from the entire country. I don't understand. And you have the Treasury Secretary of the United States saying that they might ban, or let me get the full quote of what what was said, because this would scare me as an owner of Chinese stocks specifically. And this is
Which, to be
from,
clear, you are not an owner of Chinese stocks, but if you
yeah,
were,
if I was, yeah. This is from, I can never pronounce your last name, Kyla Scallon's newsletter.
Scanlon.
Yeah, good newsletter. Yeah, I mean, very, very popular. Like I'd say economist, writer, something like that. Okay. A lot of people are saying the ultimate end game here is to decimate China. Treasury Secretary Bessent said that they could remove Chinese stocks from U.S. exchanges because, quote, everything is on the table. I don't want any exposure to China. That, regardless of whether those stocks are ripping today, I mean, my God, why would you take that risk? Even if it works out, there is so many risks here, and you can just play different games.
Yeah. I just think there's okay, coupon, for example. Like, you want to get away from all of this? Coupon is a way to do it. You want to get away from all this? Alsea. Like, I don't think this is going to affect Mexican fast food franchises that buy their goods in the country. Like, I think there's ways to make money where you don't have to bet on this. I recommend looking at companies that you think are going to be insulated and have no impact. No supply chains, nothing involved in China. That might be hard. Maybe I'm
Well,
underestimating the amount of
China,
company.
US, right?
Yeah,
Because Coupang is definitely China, South Korea.
sure.
But
But yeah, anything with China-US relations, I'm kind of just staying away. Maybe I'm underestimating how many of my own portfolio companies have some impact there, have some
well,
sort
as
of
long as
supply chain.
most companies, for example, let's look at American Express. That's one that's flying up my watch list. Will they be impacted by a recession? Yes. If spending goes down, sure. Yeah. If travel spending goes down, especially, they will get impacted, but they are not going to be decimated by tariffs. And I think they can come out strong on the other side. This is also another example of why caring about a conservative balance sheet, you it sounds suboptimal to have a conservative balance sheet for about 9 out of 10 years. But every 1 out of 10 years, or maybe even less, you go, "Oh, it's nice that we have 5 to $6 billion in net cash. Okay, I'm not concerned about Airbnb making it through to the other side." Whereas if Airbnb was levered 3 times to their EBITDA, I would be concerned.
Let me ask you this. Am I dumb for not buying Amazon through all this?
Well, you probably look like it. Well, I'm not sure how they're reacting. I'm just pulling this up in real time. I guess thank you, Trump, for making it newsworthy as we recorded this episode. And thank you for that commentary because we could have looked like total idiots. Yeah. They're up 9% today, so I guess right now it looks dumb, but I don't think so. They could get impacted really badly by this. There's someone that I would like to see how it shakes out.
Sure. All right. We should also mention here we are going to be moving our power hours to what did you say? Thursdays?
Thursdays, maybe later in the day, just to give us as much of the week's news as possible to hit. Yeah, we'll do Thursday, maybe the same time, maybe a little later. Kind of, we'll have to work that out ourselves. And we're going to release it like Friday at midnight, just so we don't get like last week we had just totally stale news on Sunday, and it probably works better to just release it on Friday morning. Either way.
Yeah, we're gonna stop having such enormous lag time between recording and production because last week was a perfect example of how stale everything becomes. Let's shift.
We didn't talk Airbnb or Philip Morris.
Okay.
Let's talk through those because those are probably, we made some trims around the edges, but Airbnb, we both bought them. I'm assuming a full position for you, maybe. No, just a little bit. I made it a full position pretty much. I'm pretty confident in the company here. If we pull up, maybe we can just pull up some FinChat charts here. I guess I should have had that loaded up. What's our market cap as of now, Ryan?
Let's see here.
And this is
Do this in
before
real
today's
time.
jump.
I think this actually might be inclusive. 65.7. It's probably After today, I would assume it's around 70, low
Well,
70s.
let's just go. The 65 is probably right around where we were buying. So if 65 billion, now you have, I think, and I wish I had the numbers in front of me, a lot of net cash on the balance sheet. So let's say that enterprise value has fallen below 60 billion. Now, if I look at their revenue figures, and I think I remember this correctly, they are at $11.2 billion in revenue. Given their growth rates, given their geographical expansion, and just, we can't go through the full thesis in this episode, but I think that there's a pretty clear path to them, unless we go through a global, depression, for them to hit $20 billion in revenue over the next 5 to 7 years, maybe even sub 5 years if the economy keeps growing at a good rate. Again, I should say, I don't know whether that's going to happen. But they can get to $20 billion in revenue. And I think, given this is excluding any benefits they'll have from the net interest income from the interest income they hold on customer deposits, I think they have a path to 30% operating margins if they want to. So that it turns into about $6 billion in earnings. And we're already at, I think, 22. Is that 22% right there, Ryan? Yeah.
Operating
So,
margins?
yeah.
Yeah.
So again, I'm saying a sub $60 billion enterprise value. We get a path to, I think, $6 billion in earnings, really attractive working capital dynamics. So the cash flow is going to look even better for a business, I think, that can widen its moat, high quality, great brand, global diversification, strong network effect, all that good stuff. And they keep buying back stock. So I'm seeing a good positive indicator on their capital allocation strategy, whatever, just how good they are at that. I mean, it all adds up to me that I think, look, cheap stock, good business, good management team. I like it.
Yeah. I think EBIT's a reasonable metric to use for them here. And EV to EBIT, basically 22 times when we were buying this. I mean, if you offered that to me, I don't know, a year ago, 2 years ago, I would have been very happy taking it, I think. So, yeah, I mean, that's a very reasonable price. Last year, it was trading at 60 times EBIT. So, um, yeah, I think for some reason, I really don't know what this is. I look at Airbnb and Booking Holdings, and I think both will do fine. But you look at them side by side, Booking's larger and they're growing even faster and they're cheaper. And I think, why should I own Airbnb? But for some reason, I just think Airbnb has a brighter future.
Well,
I
younger people. That, and again, the bookings, they are trying to make their location, or sorry, their whatever it is, their units, their, sorry, why can't I think of the places where people can stay, their stays, the people that place get by, they're trying to make it more affordable, which is going to impact GBV, even though they should grow. And I think they have more room to grow in many more markets, as Booking is probably much more globally diversified. For example, Airbnb is pushing heavily into Latin America, Germany, Japan, and South Korea, where I think Booking probably is much more saturated in those markets. And Airbnb has not done nearly the adjacent revenue opportunities as Booking. So I think there's just a lot more easy hurdles to climb for Airbnb. And I think they're a better brand.
They're competitively advantaged. I mean, it would be so hard to amass this supply of homes on a marketplace today, especially when Airbnb is already available and they do a good job taking care of their hosts. So, yeah, I think there's a lot to like. I think they can grow booking volumes probably 10%, maybe 10% plus for a decade. I hope that's not too overconfident, but I mean, obviously, part of that's dependent on the average daily rate, but I think they could really continue to grow nights booked at a really solid rate for a long time. So I like it. Reasonable valuation. They can be extremely profitable, and they've got that cash flow advantage as well. So, um, yeah, I'll leave it there. You sold Philip Morris. Give me your thoughts.
Well, it comes down to this. The stock was ripping when everything else was falling. And again, I looked at Airbnb and I said, okay, in 5 years, I think in an optimistic scenario, Philip Morris can get down to an EV to EBIT of about 10. But maybe they probably need some foreign currency help. I'm not so sure if they can do that, if they're not going to be as fast of a grower. And I thought, look, this is a giant business. Market cap was about $250 billion. This is not including dividends. Maybe that could double within 5 to 10 years. And I thought, yeah, look, Philip Morris International, I think they'll do fine for shareholders over the long term. But I saw that. I just saw the valuation got really, really stretched. And some other things on my watch list, specifically Airbnb, I thought were much more attractive. And I just switched it. And it was in a non-taxable account, so taxes were not a concern. And it's just the fact that Philip Morris International had gone up almost 100% in a year when a lot of stuff had fallen. I would love to own Philip Morris again, but as of now, on the watch list.
Okay. Before we move on, and I want to talk about why I bought Google. But before we do, I do want to mention we always talk about FinChat here. On days like this last week, or weeks like this last week, I should say, it is so helpful to have all this data at your fingertips to be able to do your work quickly and go from idea to actual investment so much faster than if you were tracking this data manually. So we use it here. finchat.io/chitchat will get you 15% off any paid plans. Recommend checking it out. And Blue Chippers Club. It's also a nice time to be in a community of stock-focused investors because you, get good investing ideas. You can get feedback on your current ideas. You can break down your portfolio. You can talk to other investors, see what they're thinking about stuff like this. And Blue Chippers Club gives you just that. They are building a tight-knit community of stock-focused investors. I really love the platform and I recommend checking it out. We're in this community ourselves. We talk about stocks we own, changes that we're making all the time, and it's bluechippersclub.com. If you're interested in joining, check it out, hit apply. We look forward to seeing you in there. The link is in the description. Do we want to talk about Google?
Sure. First, we had a comment that said neither of you pulled the trigger on new holdings during the downturn. New holdings, new bank did not. I do like the business, but I guess it wasn't on the top of the watch list. I will say this, though. I'm seeing this on Twitter as we're recording because I wanted to check people's reaction to these new announcements, and I'm seeing it in the comments here. People seem to be thinking this is the bottom, and I will say it might be. Who knows? I have no idea. However, historically, the biggest up days, and we just saw QQQ go up 10% today. Historically, the biggest up days are in bear markets. So call me crazy for thinking I'm not 100% certain of what comes next. I am just waiting patiently. And yeah, most of my portfolio is invested in stocks, but with the cash I have, I'm waiting patiently for any new opportunities that I think may arise, regardless of where the broad market goes.
Is this the only recession in history that could be changed with a tweet?
I think a lot of people think that. I don't know whether it's true. Because the uncertainty around all this, that is not helpful.
Sure. Yeah, it's really not helpful for businesses that transact globally.
We're already seeing airlines really reduce their guidance. I mean, there's just a ton of stuff here that is showing recession may be out there. And this was before, again, that's not including anything after the tariff implementation, which has only been the last few weeks. And let's not forget that China has 125% tariffs on it. And that is the second largest trading partner with the United States. And the only reason Mexico is number one is because China routes through Mexico to avoid the previous tariffs. So again, call me crazy, but I'm not saying that's a guaranteed bottom there.
Yeah. Yeah, I don't know. on the one hand, it feels very self-inflicted, but at this point, I think a lot of damage has been done that is not reversible, that may have tarnished relationships with important trade partners. Um, and who even knows if it is done? Like, it's a 90-day delay. A lot more can happen. Trump pushed off tariffs with Canada and Mexico for a month, and everyone thought the world was coming back together again. And look what's
Yeah,
happened.
snip,
So
snap, snip, snap. It was like Mexico and Canada were right in the crosshairs. Now they're not. Like it's the uncertainty I think is the biggest concern. Because if you're a business, what do? You don't know what's going to happen. It can change next week. Manufacturing plans take years to really, finalize.
you pull back on your investments, which a lot of companies have. A lot of companies that were planning to invest abroad have stopped doing so because they weren't sure. You create this cautious environment. People don't know what they can do. They don't know how much something's going to cost, how much a project's going to cost, so they stop. Okay, I want to talk about Google. This is maybe the most boring stock to talk about, but I don't see how it doesn't work from here. Maybe I kind of put my brain in a pretzel there. It should work from here is what I'm trying to say. 14, I think it was 15 times trailing EBIT. And even with they doubled CapEx last year, which keep in mind, that is a decision. It's not like, oh, they can't control it. That's a decision.
They can pull back if AI spending is down, and yeah, that's going to affect cloud revenue growth, but it's not something that is. Most of it is not. What is it? Maintenance capex.
Yeah, it was only 25 times. I know that doesn't sound that cheap. 25 times EV to free cash flow. But they did that on the most elevated CapEx they've ever had. So I think it's a very reasonable price, and I think it's one of the best digital businesses in the world. I don't think that's a very controversial statement. And cloud feels like the sky is the limit there. And anecdotally, and I get kind of a sneak peek into this through FinChat working there, Gemini and Google Cloud have tons of enthusiasm around developers, the development community. If you're doing any sort of AI type development, Google Cloud's like a premier partner, and they give a lot of discounts.
Well,
for
they're the
AI
cheapest.
type
They have the
projects.
cheapest infrastructure, right? Just because of the internal stuff they build and the 10-year lead they have with the TPUs, the tensor processing units. So I think they have the cheapest, whatever. They're the most efficient compared to someone like OpenAI, who people have talked about are not as efficient.
What I'm realizing is, so different cloud. I kind of had this like, I didn't totally understand how the cloud industry worked a year ago. I probably still don't, but I used to think it was just like self-serve. You get started, boom, you're going, you're up on the clouds, and then you can change. There's maybe some development switching costs, but
You're
it's
in
not
the
a big deal.
clouds.
You're up. You're running workloads on the cloud, but certain cloud providers are obviously better for certain use cases. And then on top of it, you actually are kind of just negotiating this with some customer support rep, like some customer success person who's like, you're saying like, what's the lowest rate you can give me so I don't have to shift this to AWS? And Google offers a ton of like discounts for AI focused companies. And I don't think that's like, that's not secret knowledge. You could just look that up.
And they have the capital to do so. They have the balance sheet to do so, where OpenAI, I don't know if it's coming from a desperate standpoint, but they have to raise $40 billion from SoftBank and others. But it's just an entirely different competitive set.
Yeah. Anyway, I just think cloud continues to be in a good place, especially for Google. YouTube at this point feels undisruptible. Like you had probably the biggest threat of all time in TikTok, and they just copied it. They just copied shorts.
Yeah, YouTube will be okay. I don't know if it'll ever be a large and important part of the business, but who knows? And Google search keeps chugging along, huh?
Google search does well.
They're buying back stock. They consistently buy back.
Yeah. I know management is chronically frustrated because they don't totally optimize the P&L for shareholders, but they continue to be at the forefront of innovation. Like, they have so much talent. I think you're seeing this in Waymo today. If they just purely optimize for shareholders, I don't know if you get the successes that they've built, like a Waymo, like a GCP, like
It's a balance. It's a balance. Yeah. We have a comment here that says Spotify is on a collision course with YouTube. Yeah, I mean they're both competing with each other, but YouTube is in the better spot. I think both will succeed and probably push out everyone else within kind of the self-serve, do-it-yourself videos and podcasts and audio and whatever. But yeah, Spotify and YouTube. It's almost that old Netflix versus HBO analogy. Netflix is trying to become like HBO before HBO becomes like Netflix. Spotify's trying to become more like YouTube before YouTube becomes more like Spotify. But I think they, unlike the HBO situation, they will both win. Now, I agree with you, Ryan. I like the alphabet pitch. It's on my watch list. I could see myself owning it. I guess I
It's
just like
boring, but
Airbnb more. Yeah.
yeah, 13 times forward EBIT.
That 40,
That can change
we might
quickly nowadays.
revise that 40 bit, but let's say once you have a longer time horizon than, as we're seeing with the literal 1 week later, you have a longer time horizon than the president.
Yeah. Yeah, apparently I do. Is there
Wait,
any
we have
way can we talk about anything but the
how
tariffs?
much time do we have? What's our time? What's
I
our
got 10 minutes probably.
10 minutes? Oh, okay, we're almost, well, here's something I think is, again, comes back to my uncertainty. We have a comment here that says, I wonder if the impacts of the tweets, which I'm assuming he's saying is the president, will get lower if things keep changing every day. Trust is going down with every tweet. Yeah, that might be, at this point, the number one concern, because there has to be some form of whatever the number is. There has to be some form of stability, or else I have no idea what to do. And you can just ignore it, but sorry, I'm saying not me, but like a business has no idea what to do. And at some point, I guess you could ignore it, but it's the uncertainty is the biggest thing, I would say.
Yeah. I used to tell people, especially whenever anyone talks politics and they say, oh, this president would be better for the stock market or whatever. I used to always try to butt in and say there's actually historically no real correlation between political party and stock market returns. I don't know if I can say that anymore. No one impacts it more than the president, apparently.
At this point, yeah. Yeah. So I guess let's summarize. According to the Walter Bloomberg tweets and the press conference that is going on as we're recording this, China tariffs remain, but there is a 90-day pause on the reciprocal tariffs on all the other countries.
Go through what that means for the cost of an iPhone. You've got a great
Oh,
display
yeah,
here.
I can, and this was in the Wall Street Journal, and I believe this would apply for the China tariffs, and it's probably even more because they doubled the tariffs coming in. So this is the cost of an iPhone, not for you to buy, but for Apple to make. Now, the old pre-tariff cost was about $550, estimated by the Wall Street Journal. Let's just say that's directionally correct. Now, with the new tariffs, and this is probably even before that boost, that was going to add almost $300 to the cost of importing the iPhone. So you get a total of $850. Now, if Apple wants to maintain their margin, they need to probably raise the price of, what does an iPhone cost? No, $1,000. So let's say before their gross margin was 50% or maybe 40%, maybe a little bit lower. If they want to maintain that margin, they need to sell an iPhone at $1,500. And that's just maintaining the same margin. So again, why are we buying Apple?
Now, I will say, from this chart that you've got here, the processor is made in Taiwan. The display is made in South Korea. The memory is made in the US. Storage made in Japan. The only costs here are the battery and I believe the main enclosure. So
sorry, it was made in where?
are made in Japan, or sorry, made in China.
Oh, China.
The battery and the main enclosure are made in China. It looks like, are the only two I'm seeing. So if the tariffs are brought back on all the other components, maybe it does make sense that Apple's kind of trading
Maybe.
up on this.
But I think it's the shit again. This can change, but I think it's the fact that it's the final assembly is in China, so it's made. The iPhone is made in China and then imported to US. That's going to now have 125%. Here's a tweet from I don't know who this guy is, Ernie Tedeshai. I follow him. Maybe he's an economist of some sort. He seems to be someone who keeps pretty well up with this. And here's what, again, is like what this new update as of this recording is. It says, folks, a 10% broad tariff on everything, so every other country, plus 125% on China is a 25 percentage point increase in the effective tariff rate, even accounting for the U.S. Mexico-Canada trade agreement. That's almost exactly where 2025 tariff policy was this morning. It was just less concentrated on China and more weighted overseas. That's what I think I'm trying to say here is that it's getting more aggressive to China. But if you're thinking about just as, US versus ex-US, it's still the same. Now, personally, I like this strategy because China is an unfair player on the global scale. So maybe over the long term, the US allies in Asia, Europe, and Latin America, maybe they take on all this stuff. That's not going to be cheap. That's not going to be cheap. And China's not going to sit still and let this happen to them.
Yeah. We've got a little under 5 minutes
I think
left.
we have an ad to read, right? Before we get out of here.
Well, yeah, we already mentioned FinChat, but like I said, we use them for all this. Recommend checking it out. finchat.io/chitchat.
When we did interactive brokers, I thought we had a third one.
We already talked about them. Blue Chippers Club as well.
Okay.
We've got a meeting this
I must
afternoon.
have been reading Walter Bloomberg while you were talking about it. Either way, this is a great time to talk with, and I'll be probably posting some stuff. I've been posting like the Airbnb stuff, maybe talk about the Philip Morris stuff and any decisions I've been making. It's fantastic to have that community during times like this, as opposed to just seeing all the manic stuff on Twitter.
Yeah, especially as Twitter seems to be imploding with bots at the moment. It's always nice to
Yeah,
look for
that
alternatives.
That is a fun, that's a fun part. I thought they were acquired by XAI. Couldn't the AI? All these bots say the exact same thing, can't they? Whatever. That's a whole other thing.
What?
I have a different question for you.
Okay.
In calendar year 2025, will Tesla buy out X and XAI, the combo company?
No, they won't have enough money.
Well, all stock deal, Ryan. It's all stock, and if they do this, Musk's ownership stake of the whole company will increase because he owns so much of X and XAI.
I don't think he'll be able to get it across the finish line. And I think Tesla shareholders would be upset if it happened while Tesla is down 50% from highs.
Yeah, let's see how they're reacting today. Wow. Up as of this writing, 20%, Ryan.
Oh my gosh.
Oh, the tariffs are worse on China. I feel like I'm taking crazy pills to use that meme.
Yeah, we'll see what happens. You know what's the most concerning thing for Tesla? Is the deliveries figure.
Yeah,
that's the biggest issue.
I don't
like forget
the
about
numbers
the
are going
supply chain
down
for a second. Like demand, there is a demand issue. That's a huge problem. And you have an extremely costly business to run. You need demand to keep growing. So yeah. And if they're saying, well, demand's not an issue, then why are they producing less cars? And I know he loves to say demand's never an issue, but
they
you should
slash
produce
prices.
as many cars as you possibly can then. And you've decreased prices and you've decreased production. So anyways, all right, let me ask you this. We have another rough week, let's say, ahead. something, tomorrow something changes.
Yeah, who knows?
What stocks would you feel most compelled to add to?
Okay, yeah, this was a segment we didn't even get to. American Express is on the watch list. I'm watching for them to get cheaper. Didn't pull the trigger on them yet. Obviously, I already pulled the trigger on Airbnb. And I'm going to say, Ryan, this is one you own. And you're a little bit pessimistic, but I'd say pretty neutral on like they will get affected. We kind of had the discussion earlier. Ally Financial, 0.8 times book value, $668 million in net income on, I think, trough earnings versus a market cap of sub $10 billion. I think they can get back to over $1 billion in earnings at some point in the future. 2025 might be rough, but I think they're in a good spot. And if they can start returning cash to shareholders through buybacks, this thing will do quite well over the next decade.
I like that. I'd probably add a little more to Airbnb, and then I think Coupong's up there for me. It's already a large position, but I think they're at a very reasonable price right now. I think they're trading at the cheapest gross profit multiple they've ever had. So,
did you see the bio on the big VC that invested in Coupang?
I did. How much he said
that was quite optimistic, right?
Yeah.
Makes you think. Seems like one of the sharpest VCs out there. I forget his name. Invested in Coupang and just had glowing remarks on Bom Soo Kim, the founder, which made me feel quite good as a shareholder.
We are running up on time. To bridge the gap of China and U.S. trade relations, we are going to be talking about Li Lu next.
That's true.
Week,
good. Yeah, good timing on that.
Yeah, funny timing for an investor who spent his early life in China, had an insane story. I was reading about it this morning, and has now become sort of, people thought he was kind of a glue between American business and China. We'll see how that take lasts over the next few months. But anything else?
I live about 20 minutes from their offices, Himalayan capital. I don't think I'm going to be let in if I go down there. But
anything else you want to mention before we close this out?
I don't think so. If you want, we'll have consistent amount of shows. The power hours, we're going to be talking about all the craziness, like the one we're recording right now. We're going to be talking about all the craziness, but any sort of long-term stuff, the Li Lu bio, any sort of deep dives on companies, interviewing analysts, that'll be on our Wednesday morning episodes. And we might change up the schedule a little bit, might change it to Tuesday or Monday. Who knows if we make the power hour released the day after we record it. But either way, the two type of episodes we do every week is not going to change. All right. As a disclosure, we are not financial advisors. Anything we say on this show is not formal advice or a recommendation. Ryan and I or any podcast guest may hold securities discussed in this podcast, may have held them in the past, and may buy, sell, or hold them in the future. Thank you, everyone, for tuning in for the live stream today and for listening wherever you get your podcast. And we'll see you next week.